quarters in this year. The Nifty in the meantime 7 points higher, 54.04, not moving too much, but it's all stock specific this afternoon, and that's exactly what we're seeing on the ONGC counter, on the on the OBC counter, and of course on something like a TTML as well. Let's introduce a fundamental viewpoint on the show as well. Varun Goel joins in now, and of course Hitendra has been with us on the technicals of this market. Varun, good to have you on the show. What have you made of these numbers? Let's talk OBC. We were just speaking to the management, still 6% up on the stock.
Good afternoon, Sobi. I think more or less from the banking space, the best set of numbers have in fact come from the banking space in this quarter. If you look at the credit growth numbers, I think the RBI's expectation of 20% is going to be surpassed. Our internal estimates say that we should be able to see a credit growth of around 25% this year. Whatever interactions we had with various infrastructure developers and banking companies, it seems that 25% should be quite doable. The only concern that we have is on the asset quality, especially for the PSU banks. I think for large cap PSU banks, there is going to be a concern on NPAs and asset quality, at least for the next 2 quarters. So the preferred space for us continues to be private sector banking plays, and we'll continue to be bullish on that side.
Okay, fair enough. Hitendra, a couple of very active stocks for you. If you can look up Petronet LNG for us, 11% up nearly on the counter as we speak. Thanks so much for that. That's ONGC, one big earning that we're watching out for today. Varun, let's talk a little bit about SAIL. When the numbers came out, there was an instant negative reaction on the stock. It's recovered a little bit now, but profits actually falling, sales also coming short of expectations. What are you expecting and advising on the stock?
So we can just repeat the name?
SAIL, Steel Authority of India.
I think for most of the steel companies that are oriented towards domestic demand, the outlook still remains quite good. I think the kind of development that we are seeing on infrastructure, a lot of highways and ports being constructed, then if you look at the consumer durable demand and automobile sector demand, all is holding up quite well. We would expect the housing sector to also pick up in the next few months. So overall, from a domestic demand perspective, I think the demand is going to be quite robust. We would expect a 15% growth in domestic steel consumption this year, and I think the steel prices have already softened a little bit, and from these levels onwards we would expect them to harden. So we continue to be positive on all domestic steel companies.
What about cement, Varun? That's the other big sector where we've seen almost all the majors report now, and the sluggishness is quite apparent in volumes and in pricing and realization. Is there anything that you would advise buying now in the market?
I think as far as the cement space is concerned, clearly, there's a whole story of overcapacity that is playing out. We would have another 40 million tons of new capacity being commissioned this year, then followed by another 30 million tons in FY12. So clearly, we're seeing a supply glut in the market. I think the overall capacity utilization levels can fall as low as 75 to 80%. We have already seen year-on-year price decline of almost 10%. We would expect a further decline of 5 to 10% in net realizations in next 6 to 12 months. Then one should also not forget that the prices of coal and other key raw material have gone up, and of course this being a monsoon season, construction activity across the country comes down during Q1 and Q2. So next 2 quarters of course are going to be soft. So overall we are underweight on the sector, and we would avoid all stocks in the space at this point of time.
Okay, fair enough. HCL Technologies, a stock still holding out in green territory. Varun, do you track any of these companies, UV Holdings or McDowell? There is just no stopping these counters, it seems. They've been the real story in the last 2 weeks.
I think, Sobi, as far as the alcohol companies are concerned, I think with the sugar cycle clearly on a downturn, there is going to be a clear benefit that is coming from reduced prices of molasses. I think around 25% of the cost for all alcohol companies is molasses, and with the sugar prices falling almost 30% from the peak, they are clearly going to benefit from that. And one should also remember that this is an industry where price points are very sticky. So whatever benefit that comes from a reduction in cost will straight away go to the bottom line. So I think next couple of years should be quite good from a profitability perspective for these companies. Also, I think with the changing demographics, the changing consumption patterns of the middle class India, we are one of the fastest growing alcohol consuming countries in the world. So the outlook for all alcohol companies continue to be quite positive. UB Holding, I haven't had a look, so I would not be able to comment.
Okay, fair enough. In the meantime, we're seeing the reaction on the PFC, Stock Power Finance Corporation, from being just an NBFC. Now it's been upgraded to the status of an infrastructure finance company as per the RBI guidelines. Stock is still down about 1% to about 0.5%, depending on which exchange you are tracking. Okay, Varun, quick check on Tata Teleservices Maharashtra. Stunning numbers coming in. They were in a loss last year. This time, profits of over 500 crores, and the stock is soaring. Do you have a reading on it?
So again, as far as the whole telecom space is concerned, we're still not sure if the pricing power has returned to the industry. We see even more intense competition in the next few months, because as the new entrants fighting a battle for survival. So I think the competition is only going to get a little worse. I think 6 to 8 quarters down the line, we are going to see some kind of a consolidation where the weaker hands are going to give way and the stronger hands are going to consolidate. Till that point of time, we are going to stay away from the telecom space.
Okay, time for us to get into another quick breather. As we do so, some of the highlights. Both these FMCG majors have been quite smart to look at as well. Within the frontline banking space, what's your top pick, Varun? What kind of a stock would you go for? Let's throw in an IDFC as well to include the sort of NBFC space here.
I think amongst FMCG space as a whole, I think last 1 year they have delivered, I think almost 20-25% return outperformance over the benchmark. If I look at the FMCG space as a whole, I don't see a lot of upside in most of the companies. I think what's happening is that if you look at the bigger companies, a clear price war seems to be playing out, and the leader in that space is clearly slashed his prices to retain the market share. Then we have the incumbents who are doing very aggressive advertising and pricing strategy to match that of the market leader. So I think as far as a broader FMCG space is concerned, the competition is going to be very intense. Profitability levels are going to come down, and I think if you look at valuations, most of the companies are trading almost 30 times 1 year forward earnings. So I don't think we like this space at this point of time.
Okay, and final quick call on IT. We didn't discuss HCL Technologies with you today, but if you want to buy one IT stock in the large cap space and one in the mid cap, which will they be?
I think if you look at the large cap IT space, we should be able to see at least 15% volume growth on a year-on-year basis for most of the tier 1 companies. I think the concern remains on the pricing environment. The scenario that we are building at this point of time is a stable pricing scenario with bias on the downside. I think with the kind of valuation that most of these companies are trading at this point of time, I would not be a buyer. Maybe with a 5 to 10% dip, the top companies in the space would become attractive. But at this point of time, I don't think we'll be adding fresh positions in any of those.
All right, we'll leave it on that note for this afternoon. Varun, thanks so much for joining in. That's Varun Goel with a couple of fundamental calls on this market. Closing out in just the next 1 minute. Before we get to that close, let's quickly touch base with Mr. Srivastava, Director of Finance at NHPC, to talk about the company's performance in the quarter gone by. Thank you, Mr. Srivastava, for joining us on the show. Sales are down a little bit, about 3.5 to 4%, whereas profits are up 7%. Why the sluggishness of